Happy August, everybody. Brenna Baucum, Collective Wealth Planning. We are officially in the back half of 2025, and with that comes a chance for us to look ahead and say, what should I be thinking about before the end of the year? And thanks to the One Big Beautiful Bill Act, we have a few new answers to that question. So this law, I'm sure you've heard a lot about it, passed July 4th, brought about sweeping tax changes that touch just about everybody, whether you are working or retired. So today I want to offer up 5 things to consider in the last 5 months of the year in light of this new legislation. Number 1, the standard deduction is going up permanently. In 2025, the deduction for married couples who are filing jointly jumps to a little over $31,000 with additional amounts for those over 65. So for most households, this is going to reduce taxable income, maybe make itemizing less necessary, subject to point 2 I'm about to make, but it might also impact how you think about charitable gifting or your tax strategy going forward. So I just hinted to this. Number 2, the SALT deduction cap is increasing for now. After years of being stuck at $10,000, the cap on state and local tax deductions is going to jump to $40,000 for joint filers in 2025 this year, and then it's going to increase each year slightly through 2029. So this is especially relevant here in Oregon, where high income and property taxes often exceed that $10,000 limit we've been dealing with. So if you have been taking the standard deduction, despite it going up, this might be the first time in a while you would be better off itemizing. Good time to do some side-by-side comparisons and some planning with your advisor and your CPA. Number 3, you might want to revisit your withholdings and your quarterly estimates. So with this combination of higher deductions and the bracket changes that are now made permanent, your 2025 tax bill might look different than you expected, especially if you were anticipating a tax increase in 2026. So whether you are working or retired, it's a pretty good time to check on your withholding strategy. Number 4, several energy-related credits are going away soon. So if you have been considering home improvements like installing solar panels, upgrading your windows, buying an electric vehicle, know that several clean energy credits are going to be phased out in the next 5 months. So in some cases, doing this work in 2025 might be your last chance to capture this benefit. And finally, number 5, charitable deduction rules are changing. So in 2026, itemized charitable deductions are only going to apply on gifts above 0.5% of your AGI. And high income taxpayers are going to see a reduced deduction rate. So depending on how much you give, it might make sense to bunch multiple donations into 1 year, into 2025, to get over that AGI floor. So that's a consideration. Another element that has changed around charitable deductions is there's this new charitable benefit for those of you who are standard filers. So next year, starting in 2026, even if you take the standard deduction, you can enjoy a $1,000 deduction for charity if you're a single filer, $2,000 if you are joint. So again, that plus the SALT plus all of these other things are also interconnected. Giving to charity always feels good here. It's always nice when it also has a tax benefit. So as always, continue to keep your charitable donation receipts. So, good segue. To read this month, I did my best to break down this law into some bite-sized pieces based on where you're at in life. So I have 2 blogs for you to check out. One is if you are working, kind of the 9 highlights for those of you who are still working. And if you're retired, you have 10 highlights to explore. So there's a lot of overlap between what benefits. I just did my best to kind of separate to make this a little bit more digestible. So feel free to read both of them. To listen to, so I have 2 things for you to read. I'm going to skip something for you to watch this month, but to listen to, an episode of Morning Stars The Long View podcast that just came out really caught my attention. It's hosted by one of my favorite women in investing, Christine Benz. And in it, she interviews the author and a business owner, Nick Majuli, who discusses changing financial priorities, the money and happiness connection, and why deciding how to spend is just as important as deciding how to invest. All right, one last note before I sign off. For those of you who are in what I like to call my niche within a niche, your Oregon PERS and you're retired, you are going to see a cost of living adjustment on your next pension payment. So that went into effect last month, should be reflected on your August pension payment. The exact percentage of what you're going to see varies depending on your tier and your retirement date, as always, capped at 2%. So if you're curious about what you're going to see, you can find more detail about that on the PERS website. All right, very technical update this month. As always, I am here for you. Feel free to reach out if you have any questions, and we'll see you in September. Bye-bye.